Our guest tonight is on the line from Long Island, New York. Michael J. Panzner is a 25-year-old veteran of the global financial markets who has worked in New York and London for HSBC, Soros Funds, ABN AMRO, Dresdner Bank, and JP Morgan Chase. He is a New York Institute of Finance faculty member and is the author of multiple books: The New Laws of the Stock Market Jungle, An Insider's Guide to Successful Investing in a Changing World. He's also written When Giants Fall, An Economic Roadmap for the End of the American Era, and Financial Armageddon, which is his website, financialarmageddon.com. Welcome, Michael. Michael, are you with us?
Yes, can you hear me?
Yes, I can hear you. Thanks for coming on. Tell us a little bit about some of the books you've written.
Well, I haven't always been negative. My first book, in fact, as you mentioned, was an overview of how the world had changed, how stock market trading had changed. But since that time, I noticed a number of different trends, and among them were this tremendous buildup of obligations, this tremendous reliance on leverage and debt, this whole idea that you could speculate and live for today instead of tomorrow. And I think what we're seeing now and over the past couple of years is all of that coming home to roost.
What do you think triggered this current economic meltdown that we're in right now?
Well, I think the thing you have to remember is that there's always been a business cycle. There's always been an up phase and a down phase, just like the seasons. We have spring, summer, fall, winter. So there's nothing unusual about that. But I think what makes it so dramatically bad right now is that I think in Washington and on Wall Street and really around the country, there was this sense that people had got the better of this business cycle, that they could somehow stop it by throwing money at it, by the Federal Reserve flooding the system with credit, by government policymakers changing the rules so that you could borrow more against your home. All of these things came together, and people started to believe that they could sort of beat the system. But all they did really was postpone the day of reckoning and made it much worse, and I think that's what we're seeing unfolding now.
You know, you made a good point there about the Federal Reserve. You know, when you look at the trillions of dollars in bank bailouts and this money being printed out of thin air, being handed over to the taxpayers, how long do you think that particular economic policy can be continued and to still have a stable, functioning society?
Well, I don't think it can be continued. I think what they're doing now is actually making matters worse. In part, I think what we're experiencing is part of a longer-term cycle of decline. We've had 5 decades or more of prosperity and peace in this world, a lot of it having to do with the U.S. role and its military as well as economic strength. But in certain respects, I think the pendulum is swinging the other way. And so we have government using many of the policies that got us here, the sort of imbalances that built up, the excesses, this idea that all it takes is really credit, I guess. And in my mind, at least, it's a sign that down the road we're going to have much more difficult problems and far greater problems, in a sense, because they're not only destroying the currency, but they're creating an environment where people will lose faith in the U.S. generally.
What is your analysis of the G7 meeting that just took place?
Well, I think there's this sense that, again, and I hate to keep harping on about it, maybe you can call it hubris, is this idea that people who are at the leadership levels, whether the U.S. particularly or you're talking about the sort of so-called leading nations, this sense that they can solve the problem. But in reality, they can't solve a problem that's been decades in the making. It requires, really, if anything, time. But I think it's somewhat like the general idea that postponing telling somebody the bad news today often has the effect of stretching it out and making it worse when the pain finally comes out. One way or another, the pain is coming. The way governments are acting and responding now, I think they're just guaranteeing that it's going to be a lingering, slow death, and it's going to be much more painful in the end.
Are you familiar with trends researcher Gerald Celente?
Yes, I'm somewhat aware of his work.
He has an interesting analysis on how it could actually manifest as we potentially walk towards a depression. What's your analysis? What's your timeline in looking at this unravel? Because I'm aware that in March, the new numbers are going to come in on how bad 2008 was, and that will further harm the stock market and the U.S. economy at this point, the global economy for that matter.
Well, when I wrote Financial Armageddon in the spring of 2007, it was a sort of peak of euphoria and the sense that we lived in a Goldilocks economy type world. But in fact, as I laid it out in the book then, I really had it broken down into four chapters, four essential chapters. And the first was economic malaise. Then I foresaw a financial crisis. Then I foresaw depression, which I believe we're in right this moment. And the next phase is hyperinflation. And along with that, it wasn't just a financial book. I think there's some overlap with Mr. Salente's views, but I believe it's going to have social implications and political implications, among them being that there's going to be more unrest, more instability, both within the U.S. and outside of the U.S., you know, all the sorts of things that matter to people, for example, how safe they feel. I think the world is going to become a much more dangerous place. So it's not just about economics, and it's not just about, you know, investing in finances. It's really about the whole sort of run of your life, I guess is the way to put it. And in my new book, which has just come out, When Giants Fall, I think that the problem that makes it worse is that you've got the U.S., which is essentially guaranteed peace and has guaranteed an economic system that's benefited the world in general, is really, in my mind at least, deteriorating. And I think at the top of the segment you talked about the Chinese efforts on the military side. Well, actually, I think that's a very important issue, and in fact, there are a number of countries which are building up their capabilities, and all of them are, in my mind, licking their lips, waiting for the U.S. and waiting for the chance to sort of step in.
And that's something I'm very concerned about, Michael. Your take on the Chinese economy, their devaluation of their currency. You know, I'm not a fan of what goes on in Washington with the administration, either of them. But Obama asked the Chinese to, you know, let their currency naturally appreciate, which it should do to keep everything balanced and fair. But they're artificially keeping that low to maintain a certain level of exports, because they're having already unrest, already riots, thousands of them, many of them unreported in China. The CCP has a cap on some of that info getting out. So we're aware that this is becoming a growing issue. So what is your take on the Chinese currency?
Well, I think that anyone who expects the Chinese or many other countries, for that matter, to be fair and balanced in their policies towards their interaction with the rest of the world is somewhat deluding themselves. They actually haven't been very fair for years, and as a result, they've benefited from a system that you know, allowed them to export and accumulate large reserves because they've been able to manipulate their exchange rate and because they've been able to exercise a great deal of control over what happens in their economy. But there's no doubt that what's started in the U.S. and is now fed to the rest of the world, a fairly broad-based economic downturn, is going to hurt everybody, including the Chinese. Now, the risks there, and if you look at history, it's not an unusual and it's not a rare one, but the risks are that instability in that country could cause all sorts of other kinds of second-order effects. I mean, for example, the Chinese may find themselves in such a box that they feel starting a conflict with another nation, whoever that might be, is a good way to divert attentions away and to rally nationalistic spirits because people are upset about economic circumstances. So there is that vulnerability and that risk in my mind. But at the end of the day, I think that the Chinese are somewhat better positioned in some respects than the United States is, and that the U.S. in particular, people are not used to a world where we're not moving forward economically, and it could be much more dramatic here for Americans, the downturn, than it would be for, say, the Chinese.
It would be properly probably also wise to bring up the fact that the Chinese government, their banks are doing really well right now, just not the people. There's definitely a major gap between the have and have-nots there, and the Chinese banking system is definitely positioned right now, from what I understand, to loan money out to all these different countries, which thus, based on the interest payments, is going to make them even wealthier. So they're definitely situated to gain from this meltdown that's probably going to hit the U.S. more than some other places. But what is your take on Russia, which is also linking themselves more and more economically and militarily with China right now?
Well, I mean, there's clearly all sorts of scrambling going on. I think there's a widespread sense, and it's what I talk about in the new book, but there's a widespread sense that, you know, the global order is changing, and there are people who are setting up alliances in anticipation of that. And you mentioned Russia and China. I mean, historically, they haven't been the best of pals, but they have been doing a number of things together, having war games. They've had war games on Russian soil. They've had war games on Chinese territory. And the same goes for other countries in other parts of the world. There's this sense that people are jockeying for position, and they're preparing for a different kind of a structure going forward. I think the days of the sort of unipolar world, or as people call it, or the sort of sole superpower, if you want to put it in those terms, the American empire, are really fading, and the rest of the world is getting ready to sort of get their share of the spoils. So certainly I think that issue is a real one. Russia has made it pretty clear about their ambitions, that they don't like the system as it is, the global system, that they don't want to play by the U.S. and Western rules. They, of course, are hurting right now because of the sort of weakness in commodity prices, but I don't expect that to last. And the other thing that's quite important about a country like Russia or China, when you get a sort of economic downturn like they're seeing, because they are, in essence, authoritarian regimes, they don't have a problem making their citizens suffer so they can keep spending money on defense. In the U.S., on the other hand, being a sort of democratic country, being driven by the will of the people, it's going to be much harder for governments to make those kinds of decisions. So militarily, we could suffer much more dramatically in an economic downturn than other countries, even though we're larger than they are.
What are some of the social implications that you foresee if this continues to unravel the way that it is?
Well, it's not too hard to figure out. I think anybody who's been paying attention to what's going on in Europe, for example, we had, starting at the end of last year in December, we had a series of riots and protests in Greece. But slowly but surely, it's been steadily spreading throughout Europe. Eastern Europe is in a very precarious situation right now. You've just recently had the sort of fall of the Latvian government, but really that's just a reflection of a broader problem. You've had marches, you've had general strikes, you've had protests against foreigners getting jobs, you've had pressure for protectionism. You've had and violence, and in a sense, that sort of social instability, in my view, is coming here. In some respects, I think people still believe, or at least they're holding on in hope that the U.S. will figure a way out of this. That our policymakers, who sort of played the game for a couple of decades, will solve the problem like they claim they can, but I think over time, as they realize that the problems here are actually not getting better but are getting worse, you're going to see a similar sort of unrest. And frankly, what I tell people is look over to Europe because it's coming here.
What's your take on these announcements about the military getting ready to possibly deal with the American public? There's multiple Army War College reports from the Army Times, sites that aren't alternative sites where they're admitting some of these things and concerns.
Well, there's a number of issues here. I mean, you know, I in fact, in Financial Armageddon and even in the new book, I make it clear that there's a real risk in the United States of martial law if things get out of hand. Now, most people originally thought that was crazy. I mean, that whole notion that in the country that sort of stood up for freedom. But I think, as you sort of made reference to, there's been a steady deterioration of civil rights. There's been all sorts of preparation going on in anticipation of the possibility of unrest, of even of rebellion. But aside from that, you've got other pressures. I mean, anybody who's been watching what's going on in Mexico, for example, should really be truly frightened. I mean, there's an essence there that the state is in serious trouble. One foreign policy analyst suggested that it's going to be potentially the next Lebanon. So you open up that can of worms just south of our border, and it creates additional problems, and it could lead to serious instability in the southern half of the country. So there's a lot of brewing pressures, and historically, if you look back, it's not so unusual to see a circumstance where you've had a boom time and a period of great cooperation. The pendulum swings the other way, and with it comes a real shift in the social mood, a real mood of anger and a real mood of bitterness, and a sense that our people have had enough and they're going to do something about it.
In this last 10-minute segment I have with you, Michael, I want to ask you a two-part question. The first part, for those with money, what should they do with it? And then the second question, when we get done with that, is for those that don't have any money or have any assets, what should they be doing to prepare for the future? But back to the first question, for those with money, is your suggestion gold, like many other investors are recommending, or is it some stocks? What are you seeing?
Well, I think we're still, in the very short term, still playing out some of the forces of the deflationary forces that I noted, previously. One of the issues you have when with this big, tremendous buildup of credit that we've had is that there's been a number of people, individuals, companies, governments, for that matter, state level. You can see it out west for sure, but really around the country, and that creates tremendous downside pressure on all sorts of assets. Real estate, clearly, we've seen the bubble burst there. But generally speaking, it adds, whether you're talking about sort of traded assets like stocks and bonds, or whether you're talking about other kinds of goods, the economy as a whole, there tends to be a sort of downward pressure on prices. But I think that we're coming near to the end of that, and it suggests that your strategy should be taking that into account. In the near term, I think there's a possibility that you can buy a lot of things cheaper in, say, 3 to 6 months' time than you can now. That's the first thing. But longer term, my view is that much of the actions the government is taking right now to try and, quote, solve the situation are laying the groundwork for a fairly severe inflation going forward. In fact, like I said, my last book referred to hyperinflation, which is, you're talking on the order of sort of triple-digit rates or higher. And that implications of that, and one of the recommendations I have for the longer term is that precious metals are going to be a haven. Do I think you should buy precious metals now? I think there's a chance that in the short run you could see some of this recent overheating come out of the market and see the price drop. But longer term, I think it's a good strategic investment.
And for those listening that don't have anything to invest, but they're concerned about the future and losing their jobs, and they're wondering, shoot, if things melt down, should I get off the grid? I'll tell you, Michael, a lot of people are asking those questions. So in terms of those concerns, how do you address that?
Well, it's a fair point, and it's not only just economic matters. I mean, I address the sort of whole issue with, resource-related constraints in terms of energy and food and water. I think that whether you have money now or whether you don't have money now, in both cases, it's going to require a serious reassessment of lifestyles. I think you have to change your perspective on what the world's going to look like. There's going to be some difficult situations in certain parts of the country, for example, that are very dependent on automobiles and very dependent on on gasoline and oil and various energy related products. Water is going to become an issue. I saw a report today suggesting that Las Vegas has some serious issues with the falling water table, I think, coming out of Lake Mead, and that water is also tied into California in some ways, and in essence, any more of a drop-off and you're going to create a serious drought condition. Water, in my mind, it could, and it's not my original thought, but I certainly believe it could be the oil of the next century in terms of its value and its the ability to find it when you need it. So those are considerations that people are going to have to take into account in America, which they haven't had to do before. I mean, the other side of this is to realize that this sort of consumer age, this idea that you could sort of live expansively forever, in my opinion anyway, is over, and people will have to adjust. They will have to take on less debt, pay it down. They have to think about alternatives. There's going to be a number of businesses closing down and moving because of various economic and resource-related forces. And so, in a way, it really requires an attitude adjustment, whether you have money or you don't, that Americans are not used to.
You mentioned on Coast to Coast AM last week about, kind of being laughed at maybe a couple years ago because this information seemed a little bit extreme, or scoffed at. Could you talk to that? Because a lot of us feel the same way when we're trying to talk to people around us. A lot of people email me and say, Alex, I try to talk about some of the stuff that you talk about, and I get laughed at by my parents and by my significant other because they don't believe that our way of life is going to change. How do you address that, whether you look at it in terms of advice for some of these individuals, or how have you dealt with some of this?
Well, the thing you have to remember, and we're seeing it even now in Washington, is that from the very beginning of this whole crisis, policymakers, central bankers, the administration, obviously we've had a change in the administration, but there has been a constant sense of denial. There's been a constant sense of trying to talk happy talk. Most of the sort of Wall Street community completely missed the boat. The point I would make now is even recently, Bernanke, the Fed chairman, was testifying, suggesting that there's a light at the end of the tunnel and that the economy is going to recover probably next year. In my view, they've been wrong for at least 2 years. Well, actually, you could make the case they've been wrong for decades, but they've been wrong for at least 2 years about the extent of the crisis and what was going to happen next. So anybody who argues that those people know what's going on and that others who actually have called it right don't is really not paying attention and is really being somewhat delusional. So clearly the thing to remember here is if Washington tells you something now, it's more likely to be a spin and a message of hope, a kind of a Hail Mary pass effort, as opposed to a realistic message that people need to pay attention to.
Well, Michael, I appreciate you coming on the show. Is there anything you'd like to take us out with, any more information that somebody might want to know about this economic meltdown, or your book for that matter?
Sure. Well, I mean, I operate 2 blogs. The first was set up a couple of years ago. It's financialarmageddon.com. The other is more recent, economicroadmap.com. Both together give a perspective that I try to talk about what the mainstream's not talking about. I have lots of resources there to other blogs, to other websites, to alternative media that really can give you a much broader picture. So if people are looking for sort of a day-to-day kind of keeping tabs on what's going on, that's a place to start.
Well, Michael, I appreciate you taking the time to come on the air and talk about these very important subjects.
Well, thanks for having me.
And we will talk to you next time. Thank you, Michael. And again, his website is
financialarmageddon.com and economicroadmap.com.